Can Robinhood continue to skyrocket? Robinhood is trading at $114 right now, and Wall Street says it could still climb some more. But here's the thing, this stock has already jumped 500% in the last year, and most people think that this kind of run means it's about to crash. I don't, and I'm going to explain to you why. I've been trading since 1999, and no, I'm not a financial advisor, and that's a good thing because I'm not here to sell you some overpriced retirement plan. No, I don't do hype. I break down the numbers so retail investors like you and me can make smarter, more confident decisions. Robinhood isn't just another brokerage, at least not anymore. They're building a blockchain, tokenizing stocks, and trying to become the all-in-one investing platform of the future. But here's the issue. They're making money fast, yet the regulators, they're circling, and the valuation is stretched to the limit. In this video, you're going to see the numbers behind the hype, the real risks no one is talking about, and the one signal I'm watching that could determine if Robinhood's run keeps going or collapses. Let's get into it. Robinhood Markets is a financial services platform. It's famous for not charging commissions on trading stocks, options, ETFs, and cryptocurrency. It gained an edge by disrupting Wall Street's long-standing fee model and opened the markets to millions of new investors through what they called a mobile-first experience. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. The company is pushing hard into digital assets, offering commission-free crypto trading and acquiring a global exchange called Bitstamp. That means Robinhood isn't just competing with brokers anymore, it wants to become the next Coinbase or Binance. Robinhood is also piloting what they call tokenized stock trading and developing layer 2 blockchain products for the American and EU markets that bridge traditional finance and the emerging Web3 economy. And that could position itself as the next generation all-in-one investing platform. And if they happen to manage this, Robinhood could go from just another trading app to the default gateway for Web3 finance. Robinhood stock is currently trading at around $114. A consensus among Wall Street analysts call it a moderate buy with a high price target of $130, and that suggests as much as 14% increase from the current price. So analysts are cautious, but what about retail investors? They've already pushed this stock into orbit. And what's fueling all this focus on Robinhood? Well, the company just posted its second quarter earnings, and the performance was solid. Now, solid is good, but not enough to send a stock soaring 500%. Something else is happening. What's really turning heads is Robinhood's latest acquisition of Bitstamp, one of the world's longest-running crypto exchanges. And this strategic move closed for $200 million and is projected to bring over 500,000 funded retail customers and 5,000 institutional clients and $95 million in additional revenue. Robinhood expects the deal to be EBITDA neutral at first and positions itself for a massive push into global crypto markets. Look, acquisitions like this aren't about quick profits. They're about planting flags in new markets before anyone else. Now, let's set aside Bitstamp for now and focus on what's really on the table. That's Robinhood's second quarter financials. The company reported sales of $989 million, up 45% year over year. But that's not the best part. Robinhood became more profitable as its net income rose over 105% from the same quarter last year to $386 million. And as a shareholder, that's exactly the type of numbers that I'd want to see. And this is where people stopped looking, at least usually. But here's why you shouldn't. While those numbers are absolutely attractive, profitability is not the main reason why investors are buying the stock. It's the performance. In the last 6 months, the stock doubled. Since the beginning of the year, Robinhood stock also rose 206%. Even better, it's up almost 500% over the last 52 weeks. So you could say that Robinhood isn't just growing, the stock is exploding. And that's the kind of move that always raises the question, is this sustainable or is it a bubble? And the answer will come down to Robinhood's initiatives and future plans. I honestly feel that their tank is far from empty, and that's because of their cryptocurrency power play. Robinhood just launched US stock and ETF tokens in the EU, giving investors access to over 200 equities, dividend support, and 24/5 zero commission trading. They're also building their own Layer 2 blockchain to power real-world asset tokenization, 24/7 markets, and self-custody. On top of that, Robinhood is rolling out perpetual futures in the EU with leverage of up to 3x and expanding crypto stakes in both the American and EU markets. Every one of these steps is a bet on the same future, finance that runs on your phone, around the clock, without Wall Street in the middle. And these moves could transform Robinhood from a simple trading app into a global multi-asset platform reaching more than 400 million potential users in over 30 countries. And if adoption grows, this could fuel more trading, higher revenue, and possibly keep Robinhood's rally alive. And this is something that comes up a lot in my Discord channel. Think about your phone, right? It's where you check everything from delivery updates to crypto prices. If Robinhood can make trading as seamless and habit-forming as checking messages, they win big, especially by integrating banking, charts, and even stock tokens. So the hook here is really simple. Robinhood isn't just chasing users, it's chasing habits, and that's way more powerful. Now, it may look like Robinhood is set for the future, but of course nothing is guaranteed, especially when it comes to crypto. First, the regulators, they're watching Robinhood like hawks. Earlier this year, the SEC fined Robinhood $45 million for more than 10 different securities laws violations. That included failing to report suspicious transactions, weak identity theft protections, a security gap that exposed millions of customer records, incomplete trading data for regulators, and breaking short sale rules. And these aren't small slip-ups. To me, they show real compliance risks. Second is Robinhood's reliance on what they call payment for order flow, or PFOF. It's a controversial and regulator-sensitive model. Here's the thing about payment for order flow. It's a big part of how Robinhood makes money, but it's under constant scrutiny from regulators. If new rules limit or ban it, its revenue could disappear fast. Critics say it creates conflicts of interest and erodes trust. And because Robinhood relies on it so much, even a small dip in trading or policy change could hit profits hard. And this means Robinhood's biggest advantage could also be its biggest liability. All right, so enough with the what ifs. Let's talk about the numbers and see how this company stacks up. With a trailing PE of around 74 and a price to sales ratio over 33, Robinhood is trading at a premium right now. Both are way above what you'd see from other big brokerages or crypto platforms. But Robinhood's profit margin is about 48%, which is higher than their competitors. And to me, that suggests that investors are paying up because they expect Robinhood to grow faster and stay highly profitable. But when a stock is priced this high, any slowdown or earnings miss can hit it hard. And that's the tightrope, right? Incredible growth priced for perfection. With one misstep, and the fall could be brutal. Robinhood is for investors who genuinely believe in fintech, crypto, and tokenization, and are comfortable with high multiples and regulatory uncertainty. And if you can stomach the risks, it may just pay off. A $1,000 investment in Robinhood from this time last year would be worth almost $6,000 today. And that's the dream, right? But only if you've got the guts to ride out the volatility. Personally, I'm liking where Robinhood is going, especially if crypto keeps up its momentum. But there could also be massive gains ahead. Though I'd keep my exposure limited, at least for now. For me, it's about playing both sides, taking advantage of the upside while protecting myself if things turn for the worst. But what about you? Are you buying or avoiding Hood in 2025? Let me know in the comments below. And while you're there, if you found this video helpful, hit like and subscribe to the channel for more information. Thank you so much for watching, and I'll see you next time.